Markets around the world are in turmoil. $9.5 trillion. That's the value of global shares that have been wiped out in just 3 days after the latest round of U.S. President Donald Trump's sweeping global tariffs. European stocks have fallen sharply. Germany's leading index, the DAX, fell around 10% at the start of trading on Monday. And in Asia, markets all closed with steep declines. Japan's Nikkei closed just under 8% down. The South Korean market suffered losses for its fourth day, closing about 5% down. Well, Chinese markets were the worst hit in Asia. The government is reassuring investors it will stabilize the market. Katrina Yu begins our coverage from Beijing.
Stock markets across Asia tumbled as the effects of the latest U.S. tariffs and China's retaliation reverberated throughout the region. Japan's Nikkei fell nearly 8%, South Korea's KOSPI more than 5%. Shares in Taiwan plummeted nearly 10%, the biggest one-day fall on record, while Australia's ASX 200 lost more than 4%.
The idea that there's so much uncertainty going forward about how these tariffs are going to play out, that's what's really driving this plummet in the stock prices. And part of the reason for that is that I think it's still uncertain whether Trump plans to use this solely for the purpose of just reducing the trade deficits in certain countries, or if there's a bigger goal in mind.
A bigger goal, such as using tariffs as a possible negotiation tool with China. On Friday, Beijing retaliated to the Trump administration's so-called Liberation Day tariffs, slapping a reciprocal 34% duty on all American goods, and announcing a slew of other measures, including export controls on rare earth minerals and trade restrictions on dozens of U.S. firms.
Pressure and coercions are not a way to deal with China. China will firmly safeguard its legitimate rights.
The response dimmed prospects of an imminent deal between the U.S. president and Chinese leader Xi Jinping, sending shares in Shenzhen's market falling more than 9%. The Shanghai Composite lost 7.34%, and Hong Kong's Hang Seng plunged by more than 13%, its biggest drop since the global financial crisis in 2008. Beijing's sovereign fund Huijin has moved to stabilize markets, increasing holdings of Chinese exchange-traded funds. And officials have reassured foreign investors that China will remain a stable place to do business. Countries in Asia manufacture many of the world's goods and rely heavily on the U.S. market. The region was therefore hit the hardest by Donald Trump's tariffs and is particularly sensitive to fears that a global trade war could trigger an American recession. Chinese state media are downplaying the market turmoil, saying the economy is resilient enough to absorb any shocks. Commentary published by the People's Daily newspaper stated that the sky will not fall, and said Beijing would prioritize expanding domestic consumption to cushion itself from reduced U.S. trade. Katrina Yu, Al Jazeera, Beijing.
Well, a short while ago, the U.S. President Donald Trump posted on social media saying this: oil prices are down, interest rates are down, the slow-moving Fed should cut rates, food prices are down, there is no inflation. And the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place.
Make sure to subscribe to our channel to get the latest news from Al Jazeera.